It's time for the Phil Ferguson Show.
Buongiorno tutti. Hello, everybody. This is Phil Ferguson, and you are listening to The Phil Ferguson Show. This is show number 243, and an amazing thing, I am releasing 3 podcasts in one day, so forgive me, it was not my plans, but events have forced my hand. Just a quick note, this is Bitcoin Part 2. If you want to really fully, deeply understand what's about to come, I do highly recommend that you go to show 242. This is 243, if I said it wrong. Go to 242 and listen to Bitcoin Part 1. If you already understand the basics of Bitcoin and how it works, you don't have to do that. But for most people, you will get far more out of this episode if you go listen to 242. It's titled The One About Bitcoin Part 1, where I go over the basics of Bitcoin, and it sets up a fundamental understanding for you of how Bitcoin works and what it is, so that you can put into context the things that I'm going to talk about in this episode. The last episode contained primarily an interview that I did with Seth Andrews on The Thinking Atheist. So if you've already listened to that, and you're coming here to hear Part 2, welcome to the Phil Ferguson Show. I really appreciate you coming over here to hear the rest of the story, as Paul Harvey might say. A quick note for anyone coming from the Thinking Atheist podcast. About the last 10 minutes of that show, I tried to wrap up and quickly summarize what's going to be 30 to 60 minutes of content. So there might be a little bit of repetition, but I really wanted to take this time to really work through all of that at length and in detail, and not in a rushed fashion, even though I feel like I must get the show out immediately because Bitcoin today is falling like a rock. Will it go back up? I don't know. I doubt it. It might go back up and then back down and then back up and then back down. It's not something I consider an investment. And as I said before, if it's a currency, and there could be an argument for that, it's a shitty currency because it's fallen from almost 20,000. Let's see, in the time I'm starting this show, what is it today? It's now 13,000. So it's lost almost 1/3 of its value in a week. You cannot use a currency as a currency that behaves like that. I still don't think it's an investment either. It's a speculation. But anyway, I digress. So in part 1, we finished up. We were starting to talk about what Bitcoins were worth compared to large companies and how comically ridiculous that is. And then we started talking about taxes. And the one thing I do want to point out in reference to taxes is not only are you responsible for the taxes, there was some talk for a while that if Bitcoins were considered property, which is could be an investment, but it's definitely not a currency, which is hysterical because it's like talking with religion. The argument keeps changing depending on who you talk to and what day and how they can get benefit from it. There was some talk about possibly taking Bitcoins that have gone up for a whole lot and converting them and selling them and buying a piece of land and not creating a taxable event. So you could avoid taxes, at least for a while, by switching from one form of property to another form of property. Well, the IRS has ruled that they will not accept that. You may not take your Bitcoins and change it over to real estate and avoid taxes in a like-kind exchange, also known as a 1031 exchange. Just not going to freaking happen. The other thing is that the IRS recently went to Coinbase, which is the largest exchange, and it happens to be based in the United States, and demanded client information. And Coinbase took it to court and said no, and Coinbase basically lost. Now, the IRS did ask for everything. Now, in this case, Coinbase won because they were able to dramatically reduce what they had to give to the IRS to accounts of 14,355 people. So if you've got a fraction of a Bitcoin or a couple $100 or maybe even a couple $1,000 in Bitcoin, you're not going to get swept up in this data dump that's going from Coinbase to the IRS yet. You're still responsible for paying taxes, assuming you actually make any money in Bitcoin, because at the rate that it's falling, if this continues, you're not going to have to worry about your taxes. So I don't know. It's gonna get fun, folks. It's gonna get real fun. But 14,355 individual investors' information is going to be sent directly to the IRS, and if you do not report it, you are at risk of fines and penalties. And like I said in part 1, possibly be considered for tax evasion if they want to go to the effort of showing that you had the intent of not reporting and it simply wasn't an accident. Coinbase is also considering, and they have not decided, but I think they're leaning towards this. Not that I have any inside knowledge, but some interviews and documents that I've read from Coinbase, that they intend to publish 1099 reports to all investors that have accounts at Coinbase, which means probably if you've made more than $600 buying and selling Bitcoins in calendar year 2017, they're going to narc on you. They're going to give that information to you and to the IRS. So you're going to owe taxes on it. So the idea that you're going to avoid taxes in Bitcoin is now comical. So if you were buying it for that reason, you have a serious problem. And it's something that I've been saying for a long period of time. If Bitcoin or any other cryptocurrency becomes big enough, the governments will step in and they're going to get their cut. They're not going to let you get away with it. If it becomes even a small fraction of the U.S. economy, they're going to step in, and they're stepping in. And by the way, the Coinbase ruling doesn't affect just Bitcoin. It's any cryptocurrency held at Coinbase. So you're going to have to hold your coins in a foreign country. And I don't know about you, but I don't want a Chinese organization holding my money for me to keep it safe. That's just me. On to the next problem. The next problem is the 51% problem. And this refers to anyone having the processing power and control of 51% or more of the blockchain or the processing power of Bitcoin or any other cryptocurrency, because these things are treated like a democracy in a way. And when changes are made, and yes, this blows the mind. It blew my mind when I tell people this. It's staggering that the rules for Bitcoin can change, and they have changed, and they might change again. And it takes a majority vote of all of the users, all of the processors, all of the miners. And we talked about before, as an individual miner, the odds of you finding anything and being successful are very, very small. So you have to join a pool. Well, the bulk of the pools, 58 to 68%, are based in China. If they all get together and decide they want to do something, they have more than 51% of the power to do it. So that concerns me. Maybe I'm being a little melodramatic and conspiracy theory here. Maybe it's my lack of understanding. But at this point in time, that's another problem. And it's not that, any one of the individual things that I say may be wrong, because I've only been working on this a couple of weeks. But I think that all of this added together makes a compelling argument why Bitcoin and maybe even all cryptocurrencies are doomed to fail as an investment. Maybe at some point, one or two of them struggle through and break through and become a viable currency in the long run. I don't see that as being impossible. But it's not something you're going to make 2,000%. Some people did. They got lucky if they got out. But there's going to be a lot of people who put in hundreds or thousands of dollars. Looks like they made a fortune, and then poof, they're going to lose a fortune. So a little more with that here. And far as this 51% problem, two different blockchains, Krypton and Swift, did have more than 51%. And if Ethereum, which is another cryptocurrency, and that currency had problems in August of 2016. So it's not like this is just theoretical. It's already happened with another cryptocurrency. Another big thing that's a problem, and one of the things that's not supposed to be with a problem with cryptocurrency, has been theft or losing coins. But I'm going to focus on theft here for just a moment. The first real big situation, and I mentioned this in part one, is a company called Mt. Gox. And I remember when this happened, and I had really no idea what the hell they were talking about. So I had to do some more research. This is a company that was founded on the idea of helping people buy and sell and trade fantasy cards for the game called Magic the Gathering. And you could trade those cards like stocks, and you could buy and sell them. I don't understand that game. I don't know that game, but it's interesting that a website that was set up to trade cards for a game decided to switch over and trade Bitcoins. And they made a lot of money. They became huge, and in only a couple of years, Mt. Gox was in charge of 70% of Bitcoin exchanges. So 70% of all trades of Bitcoins went through Mt. Gox, which again defies the entire distributed network and, broadly diversified, and it's no one place. Here it is. It's 70% one place. And that was back in 2013. And in late 13 or early 14, Mt. Gox got hacked. And they lost 850,000 Bitcoins. Now, at that time, it was only worth 450 million. Today, obviously, a very different number, depending on exactly what time you pull up the price of Bitcoin. But a huge amount of Bitcoins at the time, still a big amount of Bitcoins at the time. I mean, just imagine if 5 or 10% of all US dollars in one flash disappeared. You might lose confidence in the US dollar. Now, the Bitcoin aficionados would tell me that it's not a problem with the currency, it's a problem with the exchange. And they have a point. They're right. But if the exchanges, if the systems that hold the currency, in this case Bitcoin, keep having problems again and again and again, and there's no safety net, there's no backup, you need to start thinking of that as being a problem with the currency itself. Last year, another, this is a Bitfinex, Bitfinex. They also got hacked. And so when an exchange gets hacked, if you have your wallet at the exchange, you could lose money. Now, in this case, the hackers got into Bitfinex and were only able to gain access to some of the wallets. And it's another one of those cases where people who are really into Bitcoin will tell me you should never leave all of your money in either one wallet or at an exchange because this is a known problem. Okay, well, I don't think about that way with my investments, my stocks and bonds and mutual funds. Maybe I should. But to my knowledge, I haven't lost tens of thousands, hundreds of thousands, or millions of dollars in my brokerage accounts or my bank accounts. So this is an added concern with cryptocurrency. And when it's sold as being something that's more secure, when it's less secure, that is a problem. Now, the interesting thing with Bitfinex is that some accounts got hacked and cleaned out to zero, and some were untouched. What they decided to do was to what was called socialize the losses. So every single account that they held lost 36% of all their money, and they rebalanced everyone's accounts. So if you were one of the lucky ones that didn't get individually hacked, you still lost 36% of your money. It is truly staggering, especially for a lot of people who love cryptocurrency, tend to lean libertarian, and tend to be really into computers. They would see this as an affront. I did nothing wrong. I protected my money. Even though you, Bitfinex, got hacked, my account didn't get hacked, and you take 36% of my money. As you can imagine, people started closing and pulling accounts from Bitfinex. It didn't go well. More recently, a company called NiceHash, which was described as a Slovenian-based crypto mining marketplace. So it was not really more like an exchange, but more like a mining company where you could invest with them in dollars going to Slovenia, and they would buy servers and processors and mining equipment, and they would mine the Bitcoins, and they would give you your share based on the amount of dollars that you put in. How that's audited, I don't know. Sounds like a great way to make a lot of dollars in Slovenia. Well, they also got hacked and lost millions and millions of dollars. So it just occurs again and again. And yes, any one of these you could look at and say, yes, a bank can get robbed. And banks do get robbed, maybe more often than they should. But my money doesn't disappear. They're not taking money out of my account. Now, if a bank gets hacked and they do take money out of my account, there's government insurance for that. If a brokerage firm gets hacked and money disappears out of my account, there's insurance for that. You're not going to have that quality of insurance. You might have some kind of insurance because it's not going to be backed by the legal capacity, the policing capacity, and the taxing capacity of the United States of America. It's not an American coin. That's why you're buying it. So you're going to lose those. Most recent, Ubit, another Bitcoin exchange, and of course they exchange in other coins as well. They got hacked for a second time in 2017, and this time they lost something between 17 and 24% of the assets. The coins just disappeared. And if they're disappeared, and it's funny because that doesn't mean that they are gone forever. Someone else gets them. Well, who got them? In this case, Ubit is a South Korean company, and it's believed that the North Koreans hacked in and again stole millions and millions of dollars worth of Bitcoins, which in a weird way, if you're involved with this and you had an account at Ubit or whoever gets hacked, you might be helping accidentally North Korea. Now, congratulations, you just did that. So this company then declared bankruptcy, and they're going to distribute the vast majority of the coins that are left to everybody. And it will take court proceedings to figure out how much is left over. And the court will decide, probably the South Korean court, will decide who gets what. And in a situation where Bitcoin is now falling dramatically in price, by the time that gets resolved, you may not care. Another big and growing concern with Bitcoins, and this is Bitcoins in particular, because other cryptocurrencies don't have this specific problem, because every cryptocurrency is based on a bit of code. And of course, that can change, which surprises a lot of people. There is a restriction put on Bitcoins so that they're only released every time a block is resolved. And we talk about that in part 1. A block of data has a certain size limit, which not only creates a bottleneck if there's a lot of transactions, because you can only do one block at a time. If the blocks start getting processed faster, that means the protocol hands out more Bitcoins. And the big thing that makes Bitcoins valuable, at least in theory, because I don't think they have real value, is that they're limited in the supply. So only so many, 12 and a half, are distributed about every 10 minutes. If people get better and faster at processing these blocks of data, more Bitcoins are put out, and that defeats one of the underlying reasons for the mining and for the theoretical scarcity of Bitcoin. So it's probably not going to change. But even that has changed, and we'll talk about that in a few seconds. But the amount of electricity, the amount of energy to process and calculate these Bitcoin transactions is staggering. And keep in mind, it's not that one person is doing the processing. Everybody in the whole fucking world is in a race to do the mathematical calculations, the algorithms, solving the formulas for this one block of data. And whoever gets it first gets the Bitcoins. Everyone else spent all their time and effort and energy and got nothing that time, but they might win next time. So everyone in the world is trying to solve the same incredibly complicated problems, and virtually everybody gets nothing out of it, but spends a lot of energy. So we talked about in part one, mining and how it might cost $1,200 to $1,800 to get one Bitcoin worth of Bitcoins, I guess, $1 worth of Bitcoins. If the price falls low enough, the miners might stop, because who wants to spend $1,500 on electricity plus air conditioning and the labor and the maintenance and all that if Bitcoins are worth $2,000 and poof, overnight, people stop and all that equipment becomes close to worthless. It may be able to be used for something else. But the country of Venezuela has a subsidized electricity rate. So people have been setting up a large amount, not large globally, but large for Venezuela, a large amount of mining equipment there. And Venezuela has suffered blackouts and brownouts in their electrical grid because of Bitcoin mining. It has been calculated that by February of 2020, if Bitcoin were to continue at the rate that it was growing, which now seems unlikely with the recent collapse, but if it did, Bitcoin mining could theoretically, and the calculations are a little disputed, but Bitcoin mining could use more electricity than is produced in the entire fucking world. That's staggering. And some people argue that, that's off by 10, 15, 20%, whatever. I mean, it's a comical distinction. It's a problem. One of the largest companies, Bitmain, who is associated with this ant farming stuff, they have 100-meter-long warehouses, one after another. It's basically, think of your, in the United States, we have storage facilities where you can go get a 5x5 or a 10x10 storage space to put your stuff while you move, or maybe you have too much stuff for your house. It's buildings like that, but they're the entire length of a football field, one after another. And they're trying to get Bitcoin and other currencies. Another thing that is often told is about retail stores. More and more stores are accepting Bitcoins, which is true, or at least was true. But with the volatility that has been induced, stores are going to stop carrying Bitcoins or stop accepting Bitcoins. And one of the first big notable ones is Steam. Steam is the online gaming platform where you can get lots and lots of games to play online or download to your computer. They're no longer taking Bitcoin because of the high fees and the high volatility. We've talked about fees and volatility already. And if you're a retailer, you don't want to hold this stuff. You just want to get paid. You don't want to get paid and find out tomorrow you lost 30% of your money. It's just not interesting. So more and more retailers, I expect, as this volatility continues, are going to drop this. The other thing we talked about, fees. The average fee to have a Bitcoin transaction processed quickly is 28. I think today I saw something that the average has now jumped to 40. And if the volatility continues and the trading activity stays hot, people who want out are going to pay more. They're going to pay 50, 60, 80, 100. Why not pay $1,000? I mean, your Bitcoin was worth 19. You bought it for 4, and now it's worth 12. If you can pay $1,000 and have it processed in 10 minutes and get out at 11, 12 minus your $1,000 fee, would you be willing to pay it? I'd have to give it serious consideration if that's what it costs to get out. Because if you have to wait 2 days for your transaction to go through, because again, they're limited by the data size of the block that builds the blockchain, which is what the miners do. So another thing about cryptocurrency in general is there's been many ICOs. Now with stock, there's IPOs, initial public offerings. Well, there's ICOs, initial coin offerings, because So much money is rushing into this, at least was when I collected all this data. Everybody wants a piece of the action. And so new coin offerings are being issued almost daily, if not sometimes more than one a day. They had a cryptocurrency called Confido. I thought it was funny that it started with con. And they sold initial coins, and they were calling it and promoting it as a small batch, kind of like a small batch beer or something. And they sold $375,000 of coins at the initial offering. Well, you're not going to be surprised, given the tone of my show, that the website and everything associated with this company disappeared. Just poof, gone. And so all the coins that people bought are worth nothing, because this coin, this cryptocurrency, like every other cryptocurrency, has no intrinsic value. So if the confidence is lost, if the crowd, the group of owners who own this are scared, they'll run for the exits and it will collapse fast. I mean, we're talking overnight for this company. I mean, in a flash, it just went to zero. Nobody wants it. Completely worthless. The $375,000 is gone. The same thing will happen with the big ones. It's kind of happening now, but it might go back up. I could be totally wrong about all this. I could be totally wrong about anything. There could be a God. But I think Bitcoin is going to have huge drops. It might bounce back some. There's going to be more drops. And it might stabilize at some lower price. That might be $8,000 a coin. It might be $8 a coin. I don't know, because there's nothing under it. There's no thing that you can trade it for other than dollars. Another cryptocurrency called Ether, which is extra hysterical to me because of what the word ether means. It just disappears into the ether. They made a change to the protocol, to the code, because it's just a bit of software that decides when coins are handed out and what the process requirements are and how all that works. They made a bit of change that was agreed to by the vast majority of the miners and the users of Ether, and it created a little bug in the program. It's just hysterical. And $300 million of this currency was then sent to one user by accident. $300 million of nothing, but $300 million of that day that it went to one user. And that user realized that there was a problem and immediately wanted to fix it because they were a believer in this coin, this cryptocurrency called Ether. And they tried to send all of the Ether cryptocurrency back to everyone that it belonged to before it got sent to them. They could have just said no and screw all you. I just made $300 million by a little glitch, a teeny little error in a bit of computer code. They made $300 million. But they decided no, they were going to play nice and be fair and send it back to everybody that it came from. When they sent it back, they did it wrong. And the $300 million is lost forever. Because when you lose your cryptocurrency, if you lose your private key or you lose your wallet or you lose access to any of those things, it's gone. It can't come back. Now, if all the users decide to break the code and refund all the money, I guess they could do that because it's just a piece of code in a computer. But if they do that, you devalue the entire idea of this having a fixed amount. So all these users essentially lost, at least at the time, $300 million worth of their investments. Another segment that I called Fork You is Bitcoin had what they call in the community a hard fork. In August of 2017, just a few months before the recording of this, there was a big dispute in the Bitcoin community because they recognized, even before I understood how this would be a problem, that Bitcoin in and of itself is unscalable or cannot scale appropriately because of the way they do the blockchain processing. And the blocks that make the blockchain aren't big enough. And so they wanted to increase the size from 1 megabyte to 8 megabytes. And there was a schism. And there were people who thought you can't change that about Bitcoin because it won't be Bitcoin anymore, which they are called the Bitcoin originalists. This is cracking me up. The comparisons to religion amuse me. And then there were the Bitcoin moderates, I guess, who wanted to make this change. And they couldn't agree. So there was a split, or what they call a hard fork, what you could call a schism. And the result is Bitcoin and Bitcoin Cash, which is an extra juicy, ironic name because Bitcoin is neither a coin or a cash, but it's called Bitcoin Cash. And so Bitcoin Cash is a completely separate, currency? Well, I don't know what we're going to call it. I guess, okay, we'll go with currency for now. Completely separate currency from Bitcoin. And so what they did was they set a time and date, and at this exact moment, this block and all the data that goes back in time is shared, but then there's a split. And one group of miners move forward with Bitcoin and another move forward with Bitcoin Cash. And so now you could theoretically buy and sell things in Bitcoin Cash or invest in, aka speculate in Bitcoin Cash instead of or as well as Bitcoin. So again, that was created by a little bit of change in the code. So all of this is subject to change. It's not fixed and immutable and true as originally written like the Bible. It can be changed and modified and interpreted by its users. By a vote, they can change how a cryptocurrency works. They can create a new cryptocurrency. And some companies now that want to raise funds, instead of publishing more stock, which requires a lot of regulatory oversight, they're issuing their own private cryptocurrency or crypto coins. Because why not? You don't have to follow all the government regulations. Money just comes pouring in. Well, you'd be a fool not to do it. As of the time I researched this, I found on CNET a how-to about Bitcoin that showed that there was currently 1,365 individual cryptocurrencies. 1,365. You've heard about Bitcoin. You might have heard about Bitcoin Cash, which I was just talking about, and the hard fork schism. You might hear about Ethereum or Ether or Ripple or Litecoin. There's almost no end to it. 1,300 with more coming up every day, at least while these things are becoming more and more valuable. When they stop becoming valuable, it doesn't make sense to issue these. If everyone is scared of cryptocurrencies, the new issues will stop because it's not about making a currency anymore. It's about making money in dollars or whatever your local currency is. There have been a few stocks that have tried to take advantage of this. A new company came out called the Crypto Company, and they were going to make baskets of different cryptocurrencies and sell you pieces of that, or you could invest in the company. And the company went public, and the shares went up 17,000% in 3 months. Are you fucking kidding me? I mean, 2,000% in a year is ridiculous. 17,000% in less than 3 months. So if you bought and sold the shares in that short period of time, you could have made a fortune, a genuine fortune, making you a millionaire and a billionaire almost literally overnight, at least in weeks, maybe a couple of months. But then the SEC stepped in and halted trading, and they're now investigating the company, and they have accused the company and the executives of manipulative trading, manipulative transaction, insider trading, and stock manipulation. There's no value there. This company, the crypto company, if you got in and made a fortune and sold, congratulations, you might be able to keep all of it. You're going to pay a ton in taxes, but who cares? If you just made $1 million and you've got to pay $300,000 in taxes, I think you, just like me, would be okay with that. But a lot of people bought these stocks as they went up, 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 and the freeze happens. If there's no underlying value to the company, you could lose 100%. Now, thankfully, you're limited to 100%, but you could lose 100% of what you put into it. Another funny thing that points to me that this is a mania, just absolutely crazy over the top, is a fruit juice company. And I forgot to look up their name, but they changed their name to FinTech because they wanted to start doing more with futures and options in fruit juices, because they were often doing options and buying to keep the prices of their product stable. So they would buy in the future, apples or apple juice or grape juice before it was even produced so they could lock in the price. And they thought, hey, we know quite a bit about exchange markets and futures markets, and we seem to be doing better with that, or at least making more money with that, than actually producing the fruit juices and selling it. So they were going to change their focus. Well, somehow the internet interpreted that as they were going to get into Bitcoins, and the price of the stock went up 200% in just a couple days. So if it was $10 a share, 200%, by the way, is not doubling. That's 100%. It went from $10 to $20 to $30 in a couple of days. And that's just insane. That there's no sudden increase in value. Another thing that I've had discussions with people that own Bitcoins is they say, well, if you watch the markets and it starts to fall, you can just sell. Well, we've already talked about that ad nauseum, that's not going to work. There's also now a futures market that has been opened up on the Chicago Board of Exchange. And you could put in a stop loss. And you could say, if it falls to a certain amount, sell it and I'm out. And you might think that that's going to cover you, that's going to protect you. No, it is not. And I'm not going to get into excruciating detail about this, but if you put a stop loss order in and the market is stable and safe and controlled and it's not very overexcited or agitated, when the price falls, your stop loss will be executed and you'll get your money out. So in that case, it can work. But if there is a run and other people have stop losses, let's just say Bitcoin is 20,000. And you say, well, I'll put my stop loss at 15,000 because then I only lose 25% and I can pocket all the money and I still win. Well, when it goes to 16,000, there's other people that have stop losses at 16,000 and 15.5 and you at 15, and they start getting executed in order. Well, when the price is falling, if the demand for the shares falls, which is very common when the price is falling, no one wants to buy it at that price. They're waiting for it to fall some more. There may not be enough purchases to actually close out or settle or transact your stop loss. And so the price will just keep falling. And the price can go from 16,000 to any other number. It could be 5,000 on the next trade. If the next two people agree to buy and sell at 5,000, the price could change from 16,000 to 5,000. This is not just for Bitcoin and Bitcoin futures, but it's for anything that is traded. When you see the ticker run across the bottom of your screen, if you've ever seen that on CNN or CNBC or whatever you watch it on, that just shows you the last trade. If the previous trade was $16,000 a coin and the next trade is $5,000 a coin, the price dropped from 16,000 to 5,000. Your stop loss is still hanging out there, and more people now want to buy at 5,000, and your stop loss could get executed at 5,000. And you think, well, wait. I bought them for 8. I wanted to limit myself to 15, and they sold at 5. So it can happen. And right now I'm going to go all the way back to the beginning of part 1 and talk about some of the promises for Bitcoin. One was stability. We don't have that. Another one was security. We clearly don't have that. No central control. Technically still true, but if you look at the limited number of exchanges, the limited number of IP addresses, the ISPs, the internet service providers, you look at the limited number of miners and the control that they could put over the market, and especially now that you know the 51% problem, there is centralized control, at least theoretically available, and there's bottlenecks to the transactions and to the trading. Next, easy to use and understand. Did you find this easy? I mean, we're talking an hour and a half of explanation, and I've only scratched the surface. I didn't go into the details and the algorithms of how it works, partly because I don't understand it. But I like to think that I'm at least middle of the road intelligent. I don't fully understand this. It's not easy to use. You have to have a wallet. You have to have security codes. And the mining is ridiculously complicated. The next one is free transactions. The transactions are not free anymore. It was free when almost no one was using it and no one was doing transactions. But once the demand goes up, and by inherent design in the system to slow down the processing, to slow down the delivery of new Bitcoins, if you want to get processed in less than a couple of days, you are going to have to pay. And then it becomes a bidding war. So not only is the price of your Bitcoin falling, but if you want to sell it today, within a few hours, if you think that it's over, you might have to pay hundreds or even thousands of dollars to get first in line to have your transaction clear in the next 10 or 20 minutes. Otherwise, you get pushed to the back of the line. And there's going to be people who put in an order to sell at $16,000. If the price continues to fall, they're going to be stunned when they only get $8,000 if it falls that far. And it may not. The last thing is it's going to be transparent, so everybody will know what's going on. Okay, that's kind of meaningless because it's transparent, but you don't know who it is. And it's going to be secret. Well, even that is now gone because the IRS just won in court the right to see the transactions over a certain size, and I think it was $20,000 from Coinbank. And they're going to see what you've bought. They're going to see what you've sold. And if Coinbank and other issuers publish 1099s, they're going to see almost everybody and almost everything. So it's not secret. They're going to know what you're buying and selling. Then I have some opinion pieces here that I've collected, and I'm just going to go through them because I think it is instructive. Now, people who are really, I'll just keep using aficionado because it doesn't sound too insulting. Bitcoin aficionados, if you hear someone who's in the financial services industry, and that includes Phil Ferguson, by the way, because I have my own investment business, that I'm part of the problem. I'm part of the secret cabal. I'm part of the Rothschild system or whatever thing they have rattling around in their head. This is not everybody. Clearly not everybody. But I've heard it many times from people who are arguing with me about the value of Bitcoin. If I quote somebody that has a history of making money conventionally with stocks and bonds, they out of hand discount that because that's the old paradigm. They don't understand that. And it's the same language that was used in the dot-com craze, and it's the same kind of language that's used in the story of the Emperor's New Clothes. You don't understand what's going on. It's a different world. This is special. You have to be smart. So they're going to discount all of these. And matter of fact, they're going to discount me, and they've long since turned off this podcast. But I want to go through some of them if you have any kind of understanding or respect for how the system works, even though it definitely has problems. I'm not here to defend the global banking system at this point, but the chief executive officer of financial conduct in England said, if you want to invest in Bitcoin, be prepared to lose all your money. So there's one thought. Another one of my favorites, John Bogle, who I talk about all the time. He founded the Vanguard Mutual Fund Company, and he was one of the first people, I think the first person, to actually make an index fund. I have 3 quotes from him. He said, avoid Bitcoin like the plague. Did I make myself clear? His second quote, Bitcoin has no underlying rate of return. And his third quote, you know bonds have an interest coupon. Stocks have earnings and dividends. Gold has nothing. There is nothing to support Bitcoin except the hope that you can sell it to someone for more than you paid for it. Now, when I put that up on Facebook, some people misunderstood, especially the part about gold. He was talking specifically about some underlying value outside of the object itself. Gold has no dividends. Gold pays no interest coupon. Gold doesn't hold land or buildings or equipment. Gold is just gold. So John Bogle and others have been very down on gold, just as I am, for a very long period of time. And it's kind of a supply and demand thing. Gold has some, I think you can calculate base value, intrinsic value maybe, because it's used in computer components. And so there is some floor. I don't know where that floor is. I've not done the calculations, and I don't know how you would do it, but I guess it could be done. But a cryptocurrency doesn't even have that. Because if everyone loses faith in cryptocurrency, It's worthless. If everyone loses faith in gold, people will still buy it for manufacturing because it has a value. Warren Buffett said, stay away from it. It's a mirage. The idea that it has some huge intrinsic value is a joke in my view. I also had a story about a Bitcoin millionaire who made $1 million and sold out. Let's see, that article was at CNBC. You can find it. Bitcoin millionaire says don't buy Bitcoins. It is a pretty comical thing. And he acknowledges that he got lucky and he bought low and sold high and you should not buy it now. And he goes through all the detailed reasons. The first one is that Bitcoin may have no value at all, which I agree with. He says it's not secure and it keeps disappearing from individual wallets. People keep losing their hard drives. If you reformat your computer, you could lose it. If someone else holds your wallet, they can get hacked. And there's no way to protect it. There's no way to track it. There's no way to secure it, which is supposed to be one of the selling points, but it's just freaking gone. So he is not very high on it. Jim Cramer, who does the Mad Money TV show on CNBC, which I'm not a big fan of, but we'll throw him in here, someone I generally disagree with. He said, it is just pure gambling at this point. Another quote, I mean, honestly, what's the difference between Bitcoin and trying to figure out the Super Bowl? I mean, it's gambling. So, and he further says, this is one of the least functional markets I've ever seen, which we talked about already multiple times. The idea that the blocks and the amount of data are limited is an inherent flaw. It didn't seem like a flaw when it was created, but now as the transaction activity has gotten so high, the system cannot function and it's not going to get any better unless the activity falls off. Kevin O'Leary, who is a famous investor and one of the stars on Shark Tank, says, I would suggest anybody who is going to play with Bitcoin use it as entertainment, just as you would going to Las Vegas. He also says it could go to 40,000 or zero. Nobody knows. I agree. Last quote from him. I just think it's a wonderful entertainment. I think it is a wonderful entertainment. I disagree with that. He goes on, just like a slot machine or putting chips in a roulette wheel. So I've had some Bitcoin arguments with people who say, don't invest in Bitcoin any more money than you're willing to lose. I don't fucking understand what that means. I do not get it. I do not gamble. I do not buy lottery tickets. I do not find it entertaining. Now, I will pay $100 for a show in Vegas, so I get value out of that. If you gamble $100 and you think you get $100 of entertainment value out of that, fine. It's not for me, but I could see for some people. I don't want to go on a whole gambling rant. I got issues. But when someone says only invest the money you can afford to lose, what the fuck are you talking about? I don't have money I can afford to lose. Now, I give to charity. I give a lot of money to charity. I'm not losing it. I'm doing something productive with it. I'm not giving it to a guy who owns 5 casinos. I'm not losing it. I'm investing in humanity. I'm doing something nice, and I'm parting with my money. And sometimes it makes me feel pretty damn good. But it's also meant to help other people, because what the fuck are we here for if not to help other people out? So anyway, sorry. Tony Robbins, who's famous for books about investments and stuff like that, he said, Bitcoin is very iffy. I don't have a clue. It looks like I look at it as if you're going to Vegas. Yeah, so same kind of thing. Janet Yellen, who is the Fed chair for the Federal Reserve. And again, this is one of those things, some people who like Bitcoin say, well, if the Fed doesn't like it, it's got to be great. That's a stupid fucking argument. She said it is not a stable source of value. And she goes on, a highly speculative asset. I think that's a pretty good sum up. So, we're getting towards the end here and we're wrapping up, but a lot of these, Bitcoin is speculation. In some ways, it's a lot like religion, where the people who are in it are devoted to it. And if you've made hundreds of % or doubled your money or 5 times or 10 times your money or even 20 times your money and you got in and you sold out, congratulations. You made a lot of money. I'm actually happy for you, but there's going to be a lot of people, because what drives a bubble is a lot of people getting in at the last minute. And it's when you are at the IGA and the cashier brings up Bitcoin and wants to start a conversation, always take that as a sign that the end is near. It follows the philosophy of called the greater fool. And when the greater fool buys the last Bitcoins, it's going to pop. There's just no way around it. And again, maybe in 10 years, I look back at all this and I'm buying everything with Bitcoin and I laugh. But I think the odds of that are really, really low. Final little thing that I've got here is from regulator Joseph Borg on an interview with CNBC, said that he is starting to hear reports of people taking out credit card loans and mortgaging their houses to buy Bitcoins. Do not do that. You should not do that even while Bitcoin is going up. Don't do that under any circumstance, at least not with something like Bitcoin, because there is no minimum to how bad this can get. So, I mean, that kind of wraps up everything that I wanted to cover on this. And right now, as I'm finishing this recording, I just refreshed the page for Bitcoin prices. And this is as of 10:30 on December 22nd, the day I'm putting this show out. Bitcoin is now $12,500. Earlier in the day, it dipped below 11,000. A week ago, it was almost 20. What's going to happen? I don't know. It is obviously very volatile. It is obviously very speculative. If it's a currency at all, it's a shitty one. Very, very shitty currency. I do not consider it an investment, and I will safely and comfortably recommend that you do not invest in any, that you do not own any, and if you do, sell it while you can. And that wraps up Bitcoin Part 2. I don't have any other comments for the show because it's already too long. So again, I will just thank you for listening, and I do hope to see you in person sometime soon. Ciao.